For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. Let's take a look at the Hormel Foods opening gap 2 standard deviation reversal trade. This should be a nice way of explaining the theory behind why we get in and why we get out of these trades. This is a very basic setup, and we join HRL here in the second bar of trading for the session, and we see we had a 2 standard deviation gap to the upside. This was an earnings surprise. This was a beat the street kind of a number. And as you know, this is my favorite way to find these trades, right, is on a non-catastrophic kind of a news event. So we had this 2SD gap open. The stock ran higher in the first bar of trading. There is an aggressive entry that's available after the first bar of trading is over, but forget about that. Let's just look at the standard entry, so the conservative way to get into this trade. The second bar of trading forms, and after this 5-minute bar is in place, we see a bunch of the pieces of the puzzle coming together. We've got expanded volume as the stock is retracing into the range of the first bar, and when the second bar is finished, it closes up here, and that gives us a very good amount of time to plan exactly what we're going to do to set up the trade, and it's all relatively straightforward from here. So the low of the second bar is $44.48. And right now we don't know if the next bar is going to trade higher or not, but for now our entry is going to be just below that $44.48. Let's say down to about $44.44. The target on the trade, if we do get into it, is going to be right at the open of the first bar of trading. $43.46 was the open for HRL, and if we get an entry in the next bar, in the third 5-minute bar of the day, it's going to be below this low, and we're going to target this open. Here we see that the third bar of the session, third 5-minute bar, got us into the position. Everybody in the room saw this morning, and of course we had a target established, and the stock was moving rapidly in our favor. So everybody likes it when these things start moving as quickly as this one did. You know, the problem is a lot of you tend to get excited about the gains, and then you want to lock the gain, and you wind up bailing on these too early. The fourth bar, again, has done nothing wrong, but quite a few people indicated that they got out on this spike up into the third bar's range. So let's talk about that a little bit and why that was a relatively good reason to start looking for the exits, although the correct thing to do was really to wait for this move, came down, tested the low of the morning, came back up, and closed out right at that opening tick. What I've done here is switch to a 25 tick chart, and what we can see is what it is that spooked some of you out of this trade this morning. This little run-up right here managed to pull people out of the position, and the reason for that is that that run-up actually happened after an inflection at this support level, which roughly corresponds to where the stock took off from in the morning. So if you're not paying attention to your own psychology, you're going to miss that these kinds of things are affecting your decision making. But the easier thing to do, or the right thing to do in this case, was to come down and use the 25 tick chart as a way of establishing stops. And if you did that, then really, if you're using the methodology that I teach you guys, what you would be looking at is you would have to have a violation of the 44.46 level before it made sense to pull the plug on this trade. That's if you're using 25 tick data to establish your trailing stops. If, on the other hand, you were just looking at an intraday 5-minute chart on this one, then you really didn't have a whole lot of good reasons to get out of this trade before hitting that profit target. You did not have a reversal of 2 closing prices, and you did not have a touch on the target, which would get you properly positioned to get out of the position. So just a couple things to consider when you're thinking about the rules for these trades. I know sometimes it's hard to hang on to them. Really, if your logic was this is where the stock took off from last time, so I'm going to go ahead and lock in gains, nothing wrong there. The bad habit to avoid here, of course, is only evident if you got out of this trade because you got nervous and let emotion get the better of you. So there's a bunch of different ways we could have played this one, a couple of different ways to lock in profits, a couple of different ways to trail stops. I hope this makes all of that a little bit clearer. If you do have any other questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.